Hey guys, I'm gonna share this the strategy with you. There's 5 types of entries or setups with the strategy, so I'm gonna break each one down. It's to catch really big swing positions, so it's not that frequent. But yeah, please let's keep the video private. And I'm just going to start with the first one. This is trying to catch the start of the channel. So it's 12-hour and 10-minute, and I'm using these settings just so that there's less noise and you just get high quality setups. So you want the 12-hour body close under the 21 EMA to start looking for shorts, and a body close above the 21 EMA to start looking for longs. So I'm just going to mark where that happened, and then we can go down and have a look. When that occurs, you drop down, and this is all on normal candles. You go down to the 10-minute, and we're going to want price to be above that. That's all staying the same. We want price to be above that close price that brought you across the 21 EMA if you're shorting, and below if you're longing. So I'll just draw that one there. I'll go and fix it on the 10-minute time frame. And then you also want the 10-minute 21 EMA to be opposite the 200. I'll show you what that is. And you also want the 10-minute wave to be anchored. So it's a very high probability setup, and it caught the shorts on Bitcoin for this short leg. It didn't catch the long, but we'll talk about that. So I'll drop down to the 10-minute time frame, and I will chuck on the indicator quick. Ignore that. Okay, so I've just scrunched my screen. So that was our 12-hour body close on the 21 EMA, and you can see that we had 4 valid entries for the short position before this massive short leg played out, right? I'll just zoom in to reiterate the points. So sorry if it's a bit messy. You can see the price was above the open level. I just changed it to red. Price was above the open level. The 21 EMA was above the 200 EMA on the 10-minute time frame, and the wave was also anchored. So all of the conditions were met. I don't know what the actual trigger is, if you wanted to close down on the 8 EMA or the first red candle if you're shorting. That the sniper trigger itself, something I'm still working on. Anyway, here as well, price above, 21 EMA above the 200, wave is anchored. Same here, you can see, same condition. And here as well, the 21 went above. You can see how it cut out this anchor over here. Cut that out, but then it went above and it anchored. And it was also above the price. If you had, I don't even know if you can put a stop that size on Bitcoin. You're only catching the highest quality trades. So that's the entry condition for the A+ setup, and it's the inverse for long. I'm just struggling to find a long that is hitting with those conditions, because this one didn't, but we'll talk about that's your A setup, and this is your A+ setup when it doesn't hit. I'll just talk to you quickly about break even and take profit potentially. I don't know if we should break even because the risk to reward is so high. I would break even on the opposing 10-minute anchor if I had to, but you can see here we would have gotten stopped out at break even if we'd moved to break even over here. This one wouldn't have. If you'd moved to break even down here, it would have never have come back to your entry. But it can save you from these early ones. That's a stop out for sure. This one's a break even. That one is the one that runs. This one would have broken even. So you would have actually only caught that position if you're using the 10-minute anchor to anchor, breaking even on that anchor before letting it run. With these moves, you want to target 10x or more, or the dynamic take profit for me is the 12-hour anchor. So hitting the 12-hour anchor is where you take profit. The only problem is the 12-hour doesn't always hit anchor. So if it's pinching off and it's nearly at that anchor point, you want to get out of the position. So that's set up A+ at the start of a channel. Okay, so entry 1B, which drops to an A setup instead of an A+ setup, is basically the channel has confirmed. You can see we've got the bullish close up on the 21 EMA on the 12-hour there, but you don't get a deep pullback. And all I mean by that is on the 10-minute time frame, the 21 EMA did not go under the 200 EMA, or it did not go below the open price if you're longing, and then above if you're shorting. So we can drop down to the 10-minute and I'll show you. All we want here is for the 10-minute price to touch the 200 EMA, and the wave on the 10-minute time frame should be on the opposite side of 0 to the trade that you're trying to catch. I call it a hemisphere, sorry. Okay, so I've chucked the indicator on, and you can see that it didn't give you the green label here, and the reason why it didn't give us that green label is because the 21 EMA did not go under the 200 EMA. That would have alerted you on the A+ setup but now it's turning into an A setup because we didn't get that deep pullback. But you can see that the wave on the 10-minute time frame is in the opposite hemisphere, on the opposite side of zero. The money flow isn't always the opposite color, and the wave is not always anchored. So it's just simply wave opposite hemisphere, price touching the 200 EMA. Again, I don't have the absolute sniper condition for this. It could be breaking back up on the 8 EMA, breaking back up on the 21 EMA. If that was your bullish close on the 21 EMA, is basically the zero cross. And if you're swinging that, that is the A setup, because the A plus setup didn't happen and price really didn't ever come back to that, or did there? Again, not sure about break even rules. If you're breaking even there, then you would have been taken out there. That is probably a re-entry on one of the other setups, which we can look at. But anyhow, again, you're swinging for a 12-hour anchor and trying to catch the full channel. So 12-hour anchor maybe up here. So 20x, 12 days. I'm not sure how tight you can go with your stop on index. I haven't traded index in a long time, but that happens. This move happens more often. The A move happens more often than the A plus move. So the A plus move is rarer, and I think, you know, it's rare because it's such a good setup. But you don't want to, you know, throw this away because the A plus hasn't happened. The problem is you have to remember that on an A plus setup, you are also going to have price touching or breaking the 200 EMA on the 10-minute time frame. So you don't know if an A setup is going to become an A plus setup, if that makes sense. So it's kind of like you do have to watch the break back and just know, like, enter it as an A setup. If it goes deeper and becomes an A plus setup, you're probably just going to have to enter again and take one loss, and then you make 20x, so who cares? Okay, setup number 3 of 5. We're still waiting for the start of a channel for the 12-hour, except sometimes you can get multiple back-to-back body closes, and that is a false channel. It's consolidation, and we want to hedge the position. This happened to me last night where I was talking to Hades. I said to him, I'm waiting for the 12-hour bullish close on USD CAD to try and catch the A setup. I was hoping that the A setup was going to come on the 10-minute time frame, but I said to him, well, he told me that he thought it was still bearish, and I saw his point of view, and I thought, you're right, it could be multiple back-to-back opposing candles crossing the 21 EMA. So the hedge position is, even though I was looking for a long, you know, for the A setup, I shorted this and it ended up actually coming back. So when that happens and you don't know if it's going to be a hedge position or not, I think sometimes it's more obvious than other times. But you want to go down to the 10-minute time frame. What you want to do is, if this is the candle close, I was looking at the structure to the left, and all I was doing is whatever the price stop candle was, I was going to this doji, and that's exactly what I did. I just limited that. That was the position that I took on the funded next challenge. I didn't go all the way down. I wish I had. I got out right there because I was going to bed. But you can do that, or sometimes there is no structure to the left to catch these hedge positions, but you can catch the divergence as well. So either or, if you think it's going to be a false channel that's starting, and I've seen that happen quite a lot. So I just go back to the 12-hour, and that's unfortunate. Like, you don't know if there's going to be consolidation or not. This could be one over here as well. You might have thought that that was the start of a short channel, and then if you go down to the 10-minute time frame, we can see if there was like a long hedge for that. You know, I haven't looked at this one, so I don't know, but we will look together. Yeah, right. Okay, so when that started, if you look at the structure to the left, like, that was your price stop candle, and I would just go above that candle, then the body. And, you know, depending if you're above, below, you limit it with whatever stop you're using. For UCAD, probably 10 to 15. Let's just see what 10 does. 10 safe. So cool. Great. So that's like your hedge position. If there was no, and it has to be immediate structure to the left, right? It can't just be forever to the left. If that's not there, then try and catch some sort of a divergence if there is one. Yeah, if you think it's going to be a hedge position, because then instead of waiting for you would have been waiting for this tap to go short then, right? And you would have been, you know, at that stage, maybe the 12 hours crossing back up on the 21 EMA at that stage. And you know, okay, shit, well, it's definitely not short anymore. Like, this is one of those weird hedge positions that I should have put on. I don't even think I can see that. You can't see that little speck that I marked up. But yeah, if it looks like the candle's body coming back up over the 21 EMA, then it probably was a hedge position to be put on. That's a very difficult one, but it's necessary because you are going to get periods of consolidation like this, back to back to back to back. Like, you know, maybe just don't trade that, look for a different pair, but it's going to happen, and it's good to know how we can manage that. And that's how I'm taking care of that. So this is the start of the channel. Those are the first 3 setups for the start of the channel. I'm going to move on to the 2 positions for re-entering during an established channel. Okay, moving on to re-entries. I've just marked up all the body closes on the 12-hour normal candles across the 21 EMA for 1 month period. So now we are using those body closes to re-enter during an established channel. That is the channel. So we're using that body close as the trend of the channel on 12-hour normal candles. Everything up until this point has been normal candles, by the way. With the re-entries, we're going to be using line break on the 10-minute time frame. So on the 10-minute line break chart, if you are longing, if you're longing, the 50 has to be above the 200 on the 10-minute. And then the wave also has to be anchored in the opposite hemisphere to the positions that you're playing. So I'll just go down to the 10-minute and show you what I mean. I'm going to go back to the start of where I marked up the 50 EMA now, right? So you can see it's the same thing. That's your 12-hour normal candle body close above the 21 EMA. And on the 10-minute line break chart, the 10-minute 50 EMA above the 200 EMA is also creating that channel. You can see that it's true here as well, right? Most of the time, the 50 and the 200 on 10-minute line break is creating the channel that you need to be looking at. So that is the conditions. And I'm just going to turn on this indicator. Okay, I'll show you. So anytime then you are getting an anchored wave with those conditions being met, on line break, you are getting your re-entries with the trend. There is a caveat to this. We really don't want to be entering on the same color money flow. We only want to be entering on the opposite money flow. We did have a small speck there of red money flow. So that one is correct. Mark that there. This one is correct. So I'll just mark that there. And then these, and yes, there can be divergences. Okay, great. That's it. Your anchored wave. That's it done. This is your A setup. I'll show you our normal candles. So I've just gone back to normal candles to show you the situation. So you can see that if that was the open price, or sorry, the 21 EMA didn't get past the open. If it had, that would have been your A plus setup from earlier in the video, but it didn't. So this becomes your A setup. That was your A setup, and this is your 2A re-entry with a trend. And with these as well, perhaps breaking even on the opposite anchor on the 10-minute. Normal candles, not line break candles for the break even. Break even is always on normal candles when the 10-minute anchors. That never came back, so you're fine. This one, depending if you caught the divergence or not, maybe one stop out at break even, second stop out at break even, and then yeah, broke even, and then the divergence entry never came back. You were fine to swing till the 12x anchor. So that's 2A, and you can see how they're layering up now, all the entries and re-entries. This is a great way to show it. We'll show you the 2B entry now. Okay, yep, so I left that out. On the 2A setup, it is also money flow has to be the opposite color, right, to get the best setups. So with this one, the only change between 2A and 2B is that the wave doesn't have to be anchored. But then again, it's like from the 1A, B, and C situation, you don't know if a 2B setup is going to become a 2A setup. So we can go down to the 10-minute again. Here's a perfect example, right? I'm just going to put like a white stick here. You've gone into red money flow on line break on 10-minute. The wave is under, it's in the opposite hemisphere, but the wave never hit anchor. But you don't know at that point, when you're starting to look that the wave is under and then it's red money, you don't know if it's going to become a 2A setup. Like, it can keep going and become a 2A setup. So, you know, I would say as soon as you're starting to get this blue brick, like the first brick close, second brick open, you can say, okay, you know what, maybe it is a 2B setup. Unless then it goes after that and creates a divergence, then might anchor, you know, that's unfortunate. It can happen, but otherwise that is your 2B setup, because the wave did not anchor, but it's the opposite money flow. And like I say, this one I know printed here and it was our A setup, but the money flow wasn't red, so it definitely wasn't a 2A setup. It was a 1B, which is graded as an A setup. Okay, I wouldn't enter on just red money flow. The wave should still be in the opposite hemisphere, like these as well. You see that's a bit ratty, because you had to wait for the divergence to be in before actually, you know, entering on the first break closing. So let's go look at those two and see what they look like. So that would have been your entry, like there was 0 drawdown. You see what I mean? So even though the wave didn't anchor, you had a 0 drawdown trade. It was beautiful. Let's have a look at the other one. Yeah, this one would have had drawdown, or you would have gotten stopped to break even if you had broken even on the actual anchor, taken out. If you didn't though, profitable trade. This one, would you have gotten, if you're broken even up here? No. And then it went. You see, this is the beauty of like breaking even. I know these trades don't happen very often, but if you're breaking even on the opposite anchor, normal candles always for break even on the 10 minute, like it's either gonna, you're either gonna make nothing or lose nothing, or you're gonna make a lot. Do you know what I mean? Like, it's like those guys in the garage in The Big Short. He said that, the nerdy guy with the glasses, he's like, we either win small or lose small, or we win big. And, you know, that's what we're trying to do here with this 10-minute break even on the normal candles. But I know it can be frustrating, because when the move runs, like after it just taps you on break even, that's super frustrating. Anyhow, those are the 5 setups. I don't want this to be a very long video. I'm just going to try and scrunch my screen and show you all of the markups then. We've done that one. This short position, we already spoke about it. That was your hedge actually to go long, because the short never entered, and by the time it is touching here, I think the 12-hour candle's back above. And then your long channel starts, and there was no A plus setup, a 1A trade. It never happened. Oh, sorry, it did. It happened down there. My apologies. But this would have been your 1B setup. Tap the 200, so it's graded as an A. This is graded as an A plus, even though you got stopped out there. That was the divergence. That was your A plus setup for the long. So that was your 1A trade as far as this video is concerned. And let me just move along. That's perfect. So that was your 1B short position. There was no 1A position, otherwise we would have a red label. If it was above the price on the 21, it would have been, but it wasn't. I can guarantee you that these are your 2A and 2B type of setups on line break. We can go and have a look at that. Let me just get rid of this. Let's chuck this on. Let's go and have a look. I don't want to lie to you. Great. There you go. I'm not wrong. Sorry, it's moved because it's line break. But not the opposite money flow. Can't look at it. Opposite money flow, great. Anchored wave, anchored wave. Anchored wave went a bit crazy. This is probably the nicest one. So it's a 2A setup. Doesn't look like there were any 2B setups here. And then this was your hedge for the long, because it actually shorted. You see that 5 setups, and that's all it is. The entire strategy, 5 setups. Those are all of them. And yeah, I don't have the exact rules for the sniper entries on all of them. Something maybe we have to work on together, because if we have the absolute conditions for the sniper entry, whether it's the first candle close in the color of the direction of play, whether it's crossing up on the 8 or the 21 EMA on the 10-minute time frame, or the first brick on the 10-minute time frame to print in the color like direction of your play. Like if you got in on the short, let's do a 10 pip stop, see what happened. So yeah, 0 drawdown on that position. Was huge. So if we can like somehow combine all of those 5 setups into an indicator, I promise you that's all you need. Like in terms of not spending a lot of time in front of the charts. I know the YouTube strategy does work and it's great because I have traded it, but I feel like it takes so much more time to be present with all of those, you know, sorts of time frames. This is literally just 12-hour 10-minute on normal candles or line break and 5 setups and we're done. Let me know what you guys think. Thanks guys.